Hey guys, welcome to this video. In this one we'll just talk about Ethereum against the US dollar and how you want to operate your brain. And the way in which you operate your brain in the next series of price moves is going to largely dictate your success as a trader. It's going to dictate whether you make money. It's going to dictate whether you over leverage. It's going to dictate whether you're confident in your trading next time. So let's start on the monthly overall. The monthly showed us big rise, okay, and the story is spelled out for everyone to see. You've got a big rise up here on hype news. So COVID comes around, people think, wow, great, I can get some of this, I can jump on. And the hype builds and builds and builds. The sentiment to the upside rises and rises and rises, and it becomes a hype asset. And eventually that gets too much. And people liquidate, they pull their orders out. And suddenly the market comes down and down and down. And as it comes down further, you suddenly get a dip to the upside and then a further move down. And this extended leg you've got to now brought about months of sideways price movement and probably a lot of boredom for many crypto traders. However, don't forget that sideways markets are not untradeable. You could have got hedge gains from June, okay, all the way to February now. So if you bought and sold this sideways, that's 6 or 7 months of gains. It's not to be sniffed at. That could have probably liquidated out every loss you had. Okay, you could have probably closed it and you're fully mitigated with those gains and you're ready to trade the other side. That is the beauty of being able to hedge. That is the beauty of being able to cover yourself and everything along with that. But the point you're at now is a little bit different, okay? And as I say, the decision-making part of your brain kicks in because you have to think to yourself, I'm seeing all these things, people are posting all sorts everywhere, and do I buy, do I sell, what do I do with my Ethereum? So let's just look at it. Now, the reason, firstly, why you're seeing the market stall at this point, as I always say on many of my videos, and lots of you guys know this who follow me all the time, come up to all my streams, you can see that this stuttering is not, random. It's not coincidental. We fully expected that to happen. I labeled that a million times. And that's the point you're at. And that's why you kill off longs at this point. Okay? Because if you hadn't killed off longs at that point and you swap to the daily, then you won't have taken advantage of all these gains you could have had. Now, the price can only teeter around for so long. Okay, and I do believe there's room for the upside, but still the point remains. We do not want to be buying highs. Okay, you can see the price comes away from here several times over, and if you kept buying it, you wouldn't have broken through. And a lot of traders make that mistake. They buy those highs and they expect to get market value from that. Now, as I say, I do expect the price to go through, but I would not want to buy it up here because it's just too late. I mean, if you'd got long lightly 1490 to 1690, great. You know, you got sufficient market value for a lot of people, but you just won't get it up here. So don't buy into these highs. If it breaks through, it breaks through. Okay, that's just how it goes. But the only time we're looking to buy is if it breaks through and pulls back. All right. Otherwise, you're just buying into resistance. Now, it is early resistance, and that is why I say I think we'll probably go through it. Okay, as the positive market sentiment inflows, people get more happy to buy. The sellers are less happy because they get a bit worried and they remove themselves. I mean, you have to think if you're selling down here and the previous yearly high is up there, you can see that there's an awful long way to go. And it does seem scary. It does seem very scary to be having this short, okay? Now, loads of short traders got liquidated down here. You read that all in the news. People who were shorting it at incredible lows for some reason, they got taken out. Now, you'll probably see the same thing happen again if you rise to the next level, okay? So your next level of key resistance is probably going to come a bit over 2,200 area. Okay, but still, that doesn't mean I want to buy it now. It's not the case that I'll ever buy, at silly prices or where there's resistance. Even though the price is low overall, the only time I want to buy is when I can ascertain a clear market value. And the only time I'm ever going to be able to do that is when the market dips, right? Because if the market doesn't dip, it looks like this. And often, as the chart gets thinner, when you zoom out on lower time frames, you can see my point quite clearly. Now, I did call this yesterday lightly long for anyone who wanted to scalp it. I would kill off those longs now. You've got gains. You've hit on early resistance, right? And you should exit. So you're out, okay? You can see clearly just by looking at it what is going to be a good price for me. Is it up here? Okay. Is it up here where the price has previously fallen away 3 or 4 times? Is that where I want to buy? Where people have sold? Okay. Or is my preference lower down? Now, naturally, as a trader, your preference should always be lower down, because if it's not, you simply are not trading with reality. You're trading in fictionality, if you like. You're trading fiction. It's not okay to buy high, and it's not really okay to sell low unless you are hedging to mitigate loss. That's the only time we'll do it. We will trade trends higher up or lower down when we're clearly mitigating loss and we're getting out of bad trades. Okay? So thanks for watching, guys. I hope that does save a few people. Just bear in mind, absolutely, yes, this could come through. Okay? And I think you've got a next significant level of resistance quite a bit higher up. But where would I rather buy it? That's your question for today. Where would you rather buy? Lower down, higher up? You can even see just now what's happened, and it should be totally clear there. Okay? That's what I'll leave you with today. Thanks for watching, guys. Hope it helps. Do hit the boost button and do go beneath this video and get started. It's all free, and you can stop yourself getting cleaned out in the market. Thanks for watching. Hope that really helps, and I'll see you in the next one. See you, guys.